The biggest misconception is that you actually need to learn some super in-depth thing to be able to make money trading. This is so dumb. In my opinion, it's the most outplayed thing in the space. It's just gotten so bad because everybody wants to have their own kind of strategy, be able to coin themselves, you know, the creator of something. But then you realize that they're all basically the same exact thing. They're trading off of super basic concepts, just really it's the psychological side is where everything changes. In this video, I'm going to show you everything that you need to be able to understand how to trade supply and demand and how to make sure that when you are drawing these zones, that you are able to have the confidence and have the ability to believe in what you are making, not only to just trade off of them, but to be able to be aware of what is happening when price reaches this area. This is probably going to be the most advanced supply and demand video ever probably watched. So please subscribe. Doing this is not only going to make you a boatload of money, but it's also going to help your mental so much about understanding that this is not something that I have to put my entire life into. This is all about learning a simple concept, one that works and one that is pretty much undefiably the most important process of every single market. The ability to read supply and demand, understand why people are buying, understand why people are selling, marking it out, and trying to predict future price moves off of it. If you'd like to, consider joining the Discord in the bio. All my lessons, all my seminars recorded in there, a full trading course inside as well. It's where I live trade every single day. I'm more active than anybody else, and I will always respond to any questions that you have and make sure that you are the most comfortable you can be. Put yourself in the best place to succeed, and I think that's with me. The discount was supposed to end today, but only for this video. I'm putting up one right here. Get in with a discount. It's only around 50 bucks. This will change your life. This is so dumb. So understand, price always will be moving. All we're doing here is trying to base previous price moves to predict future ones and see moves off of them. Why did price turn around right here? Understanding that this may be a significant area for price to then reverse back up due to price pivoting right here. There's a reason why price came down, stopped right here, and then continued back up. We are looking for future moves to do the same exact thing, coming back into this area, recognizing that there is buyers, then taking a trade, stop loss underneath the actual area, and trying to catch a continuation of the trend. Also understanding that previous resistance areas where price rejected may potentially be a future pivot point down the line as well, just like right here. There's a very simple concept in supply and demand that once a zone is broken, it will then inverse itself. Understanding right here previously that this was an area where price sold off. Once broken above, you see right here, price actually comes back above, sells off, comes right back into this previous price area where price previously rejected, buys off of it. Then you would take the trade waiting for confirmation that belongs, stop loss underneath it, and you see price continues up. My job is basically to be a weatherman, making sure I have the best opportunity using the data and kind of what I like to consider my strategy to kind of predict future price action. And I might not always be right, but I'm giving myself that confidence and I'm giving myself the best opportunity visually to give myself the best chance to make money trading. It's really a simple concept and it actually derives from most strategies. 90% of strategies are based off supply and demand. They just call it different things or they try to make it seem something, you know, that it's not. It's supply and demand, and all we're doing now is we're looking for that move. And all we're doing now is we're looking for further moves off of previous price action, because understand, price is always gauged off of something. There's a reason why things turn around at certain levels, because these companies all have values. Everything that you ever have bought or sold always has a price. Now we just try to find value in the areas. Understand that there's giant buyers and sellers that move the market. We are just looking for them in these exchanges, hoping that they are still in this area, then continuing to trade off of them down the line. There's 5 things I'm about to talk about that are going to change your supply and demand game. My favorite thing about this is that it is such a simple topic that you can really go on a chart even as your first day trading and kind of build out a supply and demand chart. The ones that actually know how to really dive into it and not only mark out these zones, but give themselves outside kind of additional confluences to make sure that their zones are legit, is how you really take this to the next level. Because understand this, people live and die by their supply and demand. So they think that these are areas that price must turn around, that they have to take trades off of it. But something I'm about to talk to you guys about specifically, like candle closes and like confirmation on these zones, is how you're really going to make sure that your zones are always playing to your side when they go your way. And it doesn't mean that it's always going to play out, but you are actually going to see the execution of price moving in your zone first, then taking the trade, believing that this will continue in your direction. All we're doing with these areas is projecting price to see some sort of exchanging big volume moves in this certain zone. Doesn't mean that the opposite direction can't be played out. Just imagine the volume that would have to come in to then match it. If we're looking for buys off of a zone, it doesn't mean that sellers can't actually throw in more volume and continue this down. That's how the market moves. You want to break structure to the downside, you need a lot of sellers to come in. If we see a huge amount of buy orders at a certain buy level, that doesn't mean we can't see the same amount of sellers coming in and pushing it down. So making sure we wait for confirmation is what we're about to get into, and make sure that you actually make sure that every time you're taking a trade off of one of these zones, you're at least playing with the correct side. You don't have to hope that the trade actually goes your way. We want to make sure that we see it before we take the trade, giving ourselves that confidence and that confirmation of the setup. We're going to build this out at a time so you can actually grow with the process of charting these zones out. So obviously the first step is drawing the zones, the most important part. This is what we call just kind of a refined zone identification, being able to filter out what should we mark out, what should we not mark out. These are all basic concepts, but then I'm going to have kind of my own Steph trades tip at the end of pause, at the end of every one of these to kind of give my input on what you can do additionally. All you're trying to do right now is try to recognize significant moves compared to kind of meh moves. The best kind of ideology for this would be just kind of understanding impulse movements. And this is something that I consider when I talk about in my strategy pivot points, areas where we're seeing a very significant move quickly and a big reversal after the fact. So this is just one clear zone that I actually do have marked out, but I cleared all my drawings for this video. This level right here. There's so many things that I like about this zone, and you can see price is currently trading almost down, and I'm very curious and I'm very interested in longs once we get down to this area. What we're doing right here is just looking at what is given to us. We're seeing a lot of things here. We're seeing a continuation of a very strong downtrend coming down, and then we're finally see this hit a low at a 4-hour level, and we don't just go and mark that out yet. Again, we are now marking this out multiple days later. So what we would do now is wait for an actual reactionary move off of this. So you guys can see right as we got down to this level, we bought up off of it, and look at how much of a push we had right up after that. That is called a pivot point. That is an area where we're looking for a huge impulsive buying setup from buyers taking this back up to new highs. This is an area you want to mark out because remember, obviously something very strong happened here to flip price in such a bearish trend. And not only did we see a huge influx of buyers, but we saw a continuation of buyers for multiple days. And my Steph trades tip of the day for this is to make sure that once you actually have the zones marked out on the 4, the daily, or the 1 hour, then go down and try to refine them so you can actually trade them on shorter time frames. So you guys saw we just marked that out on the 4 hours. So now what we're going to do is we're going to go in the 15-minute and we're going to try and just find a way to actually minimize this. What we do with this is we're actually able to now look at kind of a more zoomed in aspect of what actually happened in this area. You know, we're just looking for bottom wicks or potential entry points here. And this is something that I would like to mark out. You know, not only is this the low, but this is where the move happened. Right at this bottom, you guys can see this is the area where price really started to flip, came down, nice bottom wick twice in a row. You see we made this initial low of day, price sold back into it and bought right up off of it. So this is a scenario where I'm going to leave the 4-hour zone up, and then I could also have this smaller zone marked out and kind of give myself a shorter term trade opportunity. Maybe I'm looking for buys off of that area. You could even go on the 1 hour and notice that, look at this bottom wick. This is the bottom wick we'd want to trade off of right here. You could even go and mark this out. You're just trying to minimize the size of the zone to give yourself a better RR trade while still having an opportunity to have it SL at the low. The most important thing about this is you want to make sure that your SL is at the low of the actual zone, because remember, that is the area where it is most important to survive. You want to make sure price stays above that. If you're in longs here, it's okay if price kind of rolls in here, but you do not want to let this get below this, because understand that this is the last known area for buyers in a very long time. This could end up going all the way back down to down here, and we do not want that if we're in longs. So we want to make sure that our SL stays here no matter what. So doing this, moving SL down to here or moving SL, you know, all the way back down at the low is fine as long as your SL is underneath the actual low of the wick. All we're doing when we go in these smaller time frames and minimizing the zone is it's still the same zone, but now we're getting a different kind of look into what actually happened here and getting the best possible entry for ourselves. You know, on the 30-minute, you guys can see there's a nice little bottom wick down here we could enter a trade off of. So now this goes from, imagine, we're looking for longs. Maybe we take an entry here now because we're looking at the 30-minute instead of the 4 hour, and that is now a freaking 21 point SL compared to a 100 point SL. And it all depends on the time frames you trade. So if you're on the 2-minute, 1-minute, 5-minute scalping, I would probably look for an entry for longs somewhere down here compared to an entry for longs up here. You know, I'd want to see price kind of fizzle in here, wait for confirmation down here, see the buys jump in, SL at the low of this wick right here, giving myself a way better opportunity to see big profits and actually minimizing risk. So we're looking at the 4 and the 1 hour and the daily time frame for the actual areas of zones, but once we're actually going to day trade them, we actually zoom in, because understand, if we're trading on the 1, the 2, the 3, the 5-minute, we can't just take trades off a 4-hour zone. It doesn't work like that. It's impossible. But it obviously depends on how you trade. So that's obviously where you can, you know, put your own twist focus on. This next thing I'm going to be talking about is a multi-level confluence trading zone setup. Now I know that kind of sounds intense, but just multi-time frame confluence is what we're looking for with our supply and demand zones. This is something that is going to be a little bit harder to find, and kind of what we just talked about, and it's basically just combining zones on top of each other to actually gain strength in them. All that does is just increase reliability in the trade. There's something called top-down analysis that I don't do a lot, and let me remind you that this is something I really have looked into, but I don't do much, but it's a very good thing to kind of understand and get kind of an ideology of something that I could potentially do and give it to you. Top-down analysis is just, again, a bigger word for just multi-level time frame trading. Exactly what we just did, starting on the 4 hour, finding an area of a demand zone in this case, and then actually going on the lower time frames and finding a better entry and finding a zone inside of that area to then trade off of, which is exactly what we just did. Basically going on the 4 hour, finding a zone, then going on the shorter time frames and trying to find a perfect entry for yourself, and that would be down in this area on this trade. But this is something I looked into a while ago on the multi-level time frame, because that's been something that I've always tried to preach to people and get them to do, because it's so important being able to read multiple time frames and make sure that you can actually understand them. This beautiful person put it into a great ideology for you guys. It is just called kind of nested zones. I guess that's the word for it. Nested zones are zones that are formed inside higher time frame zones. For example, a 30-minute demand zone that is formed inside a 1 hour demand zone is a nested demand zone. The advantage that nested zones are offering is that you can use higher risk to reward than a 1-to-1. Go for a 1-to-2, 1-to-3. This is a huge impact on profitability. What I was just saying is you can really start to minimize your risk in the trades. Now, yes, that will obviously increase your chances of getting stopped out. But again, less money risked is more money made. Let's just say we had a price target set up of right here, just for the sake of the argument, okay? And this was a 200-point TP. Now that is amazing, okay? 200 points is crazy. And remember, if we were just trading this off the 4 hour, we would see that this is still a 100-point SL for us. So this is still a W trade for sure, but it's still only a 2.0 RR, which is more than I usually trade. I like to trade 1-to-1s most of the time, but still, just for the sake of this, that's not the best, especially when you're risking that much. I wouldn't like to do that. But now, what if we got an entry all the way down here? Our risk reward goes with 13. Now, this is a very, very intensely difference of the change. And it's not going to be like this all the time. But just looking at that, that just shows you're giving yourself an opportunity to really get the beneficial outcomes of your trades. You're really looking to get that ginormous profitability scale when you look at nested zones. Again, this is a pretty exaggerated example of one. It's not always going to be this much smaller, and I really wouldn't recommend trading off such a small entry on the 4 hour. But that's what price is showing us, and we have to respect that. My Steph Trades pro tip of the day for this one is that unlike what I'm going to talk about later on waiting for confirmation of buys getting into this area. So for example, we'll just talk about it quickly because I just have to address it. Usually, some people just jump in right when price hits this area because they expect to see buys. Why would I try to do that and expect to see buys when I could wait for confirmation of buys, then jump in the trade? So what I would kind of see here and what the 15 minute just shows me is I would get in right here after we see a nice confirmation of buys off of this. We would see the low of day get formed. Then we actually see buys buying off of the low of day. Then coming up, closing here, confirmating buys for me, that's not a word, but showing me that buys are actually in the market. What the heck just happened? Confirming that buys are in this zone for me, then jumping in right here, also saving a better RR for this trade than it would be, because remember, we'd be up here instead of here. Now that we know buys are here, jumping in SL at the bottom of the low we made and then targeting highs again. My Steph Trades pro tip would just be for this, actually jumping in right when this enters the zone, because this is an area we're expecting to see a lot of volume. This is exactly where price turned around previously. So I'm expecting that once price hits this area, if we really are going to see the outcome we want, that it's going to shoot up really quick. And you could really get burned on it and actually miss the entry. So when you're trading off such a small zone like this inside of an actual demand zone, even on a smaller level, I would just jump in right when price hits it because we're looking for a really sharp move. By the way, thank you for 29K, man. I'm trying to hit 30. 100K by the end of the year, I guarantee it. Please consider subscribing, man. I'm trying to give you guys all the information I can as possible and make it easy to understand. Now let's talk about the anatomy of a powerful zone. What do we actually need to see out of a supply and demand zone to actually identify that this is something that is going to work? Understand the actual move that played the trend out. If you can look at the history of reactions that have been hit in this area, go ahead and do that. But you can see right here, we have actually not tapped into this zone yet. And lastly, the strength of the reversal post entry of the zone. And you can see this is one of the best examples you can see of that. This ginormous buyback after we hit this area. And the step trade, I gotta stop doing it. My tip to you is zones that actually form in important price levels are way more likely to hold than just at, for 20,421. Zones that are actually inside of psychological or very key areas are way more likely to hold than just random ones. For example, this zone that already had this huge rejection, and this one is expected to see the same thing again, is actually right at the bottom. is at 21,000, a very key point in price. So that is just another confidence booster for me, seeing this, that, hey, this is at a really key level. The move was amazing. The reaction was amazing. Everything about this zone is setting up for another move. And it's actually right at a super important level, right on the 21,000 mark. That is such a good thing to see. The next thing I want to talk about is adapting to market structure. What does that mean? For me, this is something I do on the shorter time frames, what I do intraday when I'm actually trading live, understanding market price, reading price action, making smaller zones just to actually base my potential scalps off of. Now that I have these big zones drawn out around the chart, I want to actually zoom in when I'm actually day trading and watch live price action print out and mark out areas where I expect to see buys or sells. For example, right here was an area that I marked out. Looking at this right here, we are seeing a really nice top wick rejecting off of a previous high. Right here, we actually rejected off of this previous low, bought right back up, kind of started to curl, price falls off, and then once again tries to buy back into this, and once again sells right off, making this nice top wick. We go ahead and mark that out, and we watch price continuously do this. Look what happens. So price falls underneath, buy up, look what happens, stop right at the entrance of this wick, sell off again, buy back again, look what happens, boom, sell right off this once again, falls even lower, buys all the way back up, and look what happens. We actually come right back into this area, sell off again. This just comes down to just watching the candle print out at a time, understanding, just drawing these zones, looking for quick scalps, understanding what happens if we break these, why are we holding these areas, what can I do to potentially take trades off these. Another thing is just watching out for liquidity sweeps, and that's just, again, liquidity sweeps are, there's a clear zone indicating, at this low of day, everybody that is in longs in this area, like I said earlier, you want to have your SL here. Sometimes market makers will push the price down just underneath it to get all those orders filled, then actually see the move happening. The one thing I will say about these is when you are making these super small zones, now this one is very important, you guys can see, and it actually did hold really well, is these are less likely to get liquidity swept on because they're not very important areas. They're not, this isn't a super important area where we're looking for it has to hold the area. So that's just one thing you do have benefiting when you're trading these super small time frames is you don't need to worry about getting liquidity swept on you. But another thing, once I talk about these confirmation, we're almost there, is waiting for confirmation of sells and then taking the trade to make sure you aren't liquidity every time you take a trade. Consider the time of day, consider what the market is currently doing. We're in a huge downtrend, so we want to look for shorts and then the opportunity to trade off shorts. Understand the trend of the market. That's always going to help you out when you're doing this and making sure that you are catching a good entry for shorts. Waiting for a retracement to these areas like this are always going to help you out catch those good RR trades. Now, sub trades, pro tip, whatever, is just continue to do these, man. Continuously add and adjust these areas because it's always going to be printing out new candles. You see we just made a new low of day right here. We're going to go ahead and mark that out just and see what happens to the next price next time it comes into it. Just continuously just watch the market, look for areas you want to make sure you kind of catch a good pivot off of, and always give yourself kind of insight going forward on what price could potentially do. The last step before I really talk about that confirmation stuff is just watching out for confirmation of other assets like a Bookmap. What I use, Bookmap is an area, a website you have to pay for that actually lets you look at live liquidity inside of the market, shows you buy and sell orders, shows you limit orders, shows you passive orders, pretty much watching volume real time. So you can actually watch a chart like this with Bookmap open and also give yourself that ability to literally see orders being set in the market to make sure that you are actually standing on business in your zones. This is Bookmap. I know it looks literally ridiculous, but once you actually understand, you can watch some videos on it. It's pretty easy to trade with. Now this is on ES, so this is actually different market conditions than what we usually would be looking at on NQ, but just get the concept of what this is. This is the current price of NQ. These little bubbles track volume. This on this side is a DOM. This just shows you limit order set in the market, and the amount of them. For example, right here, you can see 100 and whatever. This can be a really good comparison to use when you are trading with supply and demand zones because you can see once price actually comes down to an area, you'd obviously have your trading view open, you'd have this open, and you can actually see if there's a lot of orders set there or not, and actually give you a lot more confidence to actually see if this is a really area where we're expecting to see a lot of buy. My key tip would be to learn about the DOM. The DOM is a very cool tool to actually get better at watching liquidity get put into the market. It is super, super important if you want to really get into that nerd shit. So you should really look at trading off a DOM. The final thing I really want you to potentially learn is how to look at footprint charts and actually learn Delta. Delta is one of the other key things like a DOM that you really should get better at understanding. Delta right here, you see at the bottom, it shows your Delta, the color of it or not. Think about this. So right now we're on a 3-minute footprint chart. A footprint chart is about as zoomed in and as technical you can get on looking at every candlestick, kind of shows you what is going on, what is being exchanged during that time. And looking at this, the Delta is really the main focus here. The Delta just shows of a specific candle. Again, we're on the 3-minute. So this candle right here, you guys can see, shows the actual delta of 1.24K green with a total of 4.2K just black, whatever. The total is that's the amount of contracts being traded here, where the delta just shows you 1.42K to the green side, the amount of contracts there was outnumbering the red contracts. So imagine this. So there were 2.83K buys and 1.4K sells coming in this candle. And there was a median of kind of a delta of 1.42K to the buy side. So there was 1.42K, I'm going to say 1,000 times, more buy orders than there were sell orders during this time frame. So that is a really good thing to see when you're trading off of a zone, is looking at an actual bounce off of that area and looking to find a lot of delta. You want to see a good delta when you're trying to take longs, because that's only going to show you that there's a lot of buys and the buys are outnumbering the sells. That is only going to help you out and give you more confidence taking your trade. Learning footprints is probably the one thing that I really want to learn next year, and I'm excited to dive into. I do understand delta and I do understand what the concept of footprint charts is, but actually applying them and trading off of them is something I have not done yet, and I'm very excited to learn more about it. But looking at delta, looking at the DOM are the two things that you really should actually end game try to learn and get comfortable with. Look at this level I found in the hourly recently, and this is a very good candle. It's kind of everything that I talked about here. We want to see that big drop, we want to see that buy back, and we want to see an impulsive move right after it. You see this nice influx coming in after it. That is a perfect area for me to mark out. So now I'm going to trade this. You guys already see what happens, and it's a quick story, okay? So price actually continues to come back down to this zone, and look what happens, man. Okay, so we would have got stopped out if we just decided to take a trade looking for buys in this area. SL at the bottom of this wick, and we would have got stopped out just looking for longs here. And this is the one thing I wanted to talk about with you guys, is waiting for confirmation. So what you didn't do here was that. You know, I told you guys sometimes if you're trading these really kind of refined zones inside of a zone, you can just jump right in at the actual entrance of it. But on the hourly and the 4-hour time frame, when you're trading off of an area like this, you want to wait for confirmation of buys before you jump into the trade. And that's exactly why we got stopped out here. We never saw buys come in, and we just saw a dump. And understand that the trend is always going to take over, no matter how good of a zone setup that it looks like. You want to wait for confirmation to give yourself the best chance of seeing that trade play out. This is another good area on the hourly time frame to look for. We had this nice buyback, price sells off, we make a higher low and see a nice impulse move off of this area. We'll go ahead and mark this out and watch what happens. Price comes back to it, goes underneath it, then closes back above. That is when I would jump in longs. I would wait to see the buys come in, wait for confirmation of the candle close, then jump in longs, SL at the bottom of the wick, play it back up to this high, and you guys see this would have played out perfectly. So all we're doing here is we are waiting for these zones to actually find that expansionary move, react, then jump in after the candle close, or just seeing confirmation of buyers. That is how you actually trade this way the most successfully in my eyes, is waiting for the confirmation, because not only, yes, sometimes you might miss it, but majority of the time you're still going to catch the trade. It might be a little bit more than an SL than you would expected, but at least you have the opportunity now of knowing that this trade is projected to play out. This is going to shift that bar a little bit your direction and actually make sure that every single time you take a trade, it played out. You know, the move happened, so now you are just kind of leaving it up to the trend to actually reverse and push it up. But on our side, we saw the buys in the area we wanted to see. We jump in. Now we already have that played out, and we just watch buyers try to continue to push this up. If it doesn't, whatever, but it's better than just jumping in and just getting instant stopped out, you know, right when it hits your zone. That is one thing that I've kind of tried to revise, and it's helped me out so much. I love you guys so much. I hope you enjoyed this video. I hope this New Year's goes well for you, man. I'm so excited for everybody to kind of indulge and try and dive deeper into all this stuff. I'm so excited for you. We're going to kill it, bro. Subscribe. I'll see you next time.